Welcome to Need to Know. This week, a special program that affects every one of you, taxes. We want to start with some big numbers. In 2011, the federal budget was $3.6 trillion, but federal revenues were only $2.3 trillion. Most of that money comes from taxes, individual income taxes, followed by Social Security taxes, Medicare taxes, corporate taxes, gasoline taxes, and the rest. Despite all those tax collections, the U.S. still had a budget deficit of nearly $1.3 trillion during the last fiscal year. Of course, much more rapid economic growth would mean more tax revenues and help close that deficit. But unless and until that happens, we're left with two ways to make the budget whole: cut spending or raise more money from taxes. Today, our focus is on that side of the equation, taxes. Specifically, how we can raise more money and make the tax code fairer for everyone. Joining us from left to right in every sense, Eliot Spitzer is the former Democratic governor of New York. Dorothy Brown is a professor of law at Emory University, specializing in federal tax law. Bruce Bartlett was a former policy analyst in the Reagan White House. He helped draft the nation's last major tax reform in 1986. He's written a new book called The Benefit and the Burden. And Dan Mitchell is a senior fellow at the Cato Institute and previously served as an economist for the Senate Finance Committee. Guests, thank you all for being here. Fairness, as it turns out, seems to be at the heart of a lot of complaints about the tax code. Now, conservative critics point out that nearly half of all Americans pay no federal income tax. They wonder if that's fair to the other half, the top half, Professor Brown, who pay just about all of the federal income tax, is it?
Well, it's fair because, as we've seen with the release of Mitt Romney's tax return and Warren Buffett's tax return, their tax rates are much lower than the middle-class taxpayers, and I would argue that's not fair.
But that's percentage. What about the bulk? If you look over the whole American population, isn't most of the tax being paid by the upper half?
Can we agree fairness is in the eye of the beholder? When you consider all the various taxes imposed upon us, those at the top 1% that earns about 20-some-odd% of all income pays about 20-some-odd% of all taxes. So we have neither an excessively progressive nor regressive tax system when all of these various tax burdens are imposed.
President Obama proposes eliminating tax breaks introduced by President Bush on all family income above $250,000 a year. Does that get us some of the way to where we need to go?
I think it's a mistake to treat people making $250,000 a year and people making $10 billion a year the same way. I don't understand why we can't have other brackets above the current one that apply at much higher levels of income. I think that's a way to get at the people, the Warren Buffetts of the world, who say they would be happy to pay more taxes without really affecting incentives for anybody who really matters.
Dan Mitchell?
As an economist, what I'm concerned about is how can we make the tax code less destructive to economic growth and competitiveness. I look at jobs and investment flowing to places like China and India instead of the U.S. And for the life of me, I don't understand why people are so fixated on trying to penalize those who are contributing a lot to our economy or who have the capability of contributing a lot to the economy but might take their business elsewhere.
We talk a lot about one particular type of fairness, which is the richer you are, the more you ought to pay. But a much more important problem today is people with roughly the same incomes pay wildly different taxes depending on their individual circumstances, whether they own a home or rent a home, the form of their income, whether it's wages or whether it's capital income. And I think this is really where a bigger problem that we should be talking about.
Let's talk a little bit more about rates, because that's where a lot of the focus of this debate goes, isn't it? The president and others complain that the rules, as they're currently written, allow Warren Buffett to pay a lower tax rate than his secretary. Is that fair?
Look, I think implicit in your question is the answer. It isn't fair. Warren Buffett gets $500 million because he has dividend payments out of Berkshire Hathaway, and somebody's earning $50,000 working 12 hours a day, 8 hours a day. The lower rate that Warren Buffett pays strikes people at a very fundamental level as being unfair. I would support, and I'm sure many others would not, but support getting rid of the differential between capital gains and ordinary income, tax it all at one level. Maybe that rate could go down if we broadened the base, as all of us, I think, would agree would be a good thing. You could have some sense of fairness where we all pay the same rate on whatever income we get.
It's worth remembering that in 1986, Ronald Reagan agreed that income from capital and income from wages should be taxed the same in the 1986 Tax Reform Act. He raised the capital gains rate from 20% to 28%. And
lowered the tax
on income.
One adjunct of this debate over progressivity and tax rates is the flat tax, which several Republican candidates have either advocated going to for all, or at least squash down, simplified, fewer rate level tax code.
Flat tax, simple, keep it simple.
We passed the 9% business flat tax.
I have proposed an alternative flat tax that people
Does a flat tax answer some of these problems with our current progressive system?
A flat tax isn't just one rate. Yes, that's part of it, the most public part that most people understand. But a flat tax also means getting rid of all loopholes, deductions, credits, exemptions, and preferences. If we can just bring the tax rate down, or tax rates down, that solves a lot of problems. Credits and deductions and preferences won't be as valuable if tax rates are low. If the tax rate's 50%, we all care about finding different ways of protecting our income. But if the tax rate's 20%, we say, oh, whatever, you know.
But wouldn't that also have the perhaps unintended consequence of raising taxes significantly higher on those least able to pay?
These people would suffer massively large tax increases, and this is, I think, the Achilles heel of this whole proposal that is generally ignored by those on the right.
Professor?
Well, that's absolutely right. And the flat tax proposals would completely exclude from taxation capital gains and corporate dividends. And I don't think most Americans would think that would be fair.
Another idea that gets circulated from time to time is a consumption tax. The United States is the only major Western industrial power without a value-added or consumption tax. In the UK, it's 20%. In Germany, it's 19%. Do we need one?
I am one of the very few people that think we do need a value-added tax. I think we could use it right now to pay for needed tax reforms. Don't necessarily raise net revenues from it, but at least it would give the government an alternative way of raising revenue.
Let me go to the professor here, because in the middle of the income distribution, about $52,000 family income, what changes about your daily life if there's a 17, 18, 19% value-added tax?
To me, a value-added tax is very regressive. So middle income compared to high income, they're going to pay a higher percentage of their income in taxes. And
just because we know wealthier people cumulatively spend less of the money they earn.
It is, as the professor said, intensely regressive. In order to get meaningful revenue from a sales tax, a value-added tax, you either have to make it hit numbers that would be enormously painful to everybody who is less than sort of upper middle class and below, or exempt so many of the basic necessities, milk, clothing, the essentials that we buy every day, that you have only a very thin set of products subject to it, in which case, even then, it's very hard to get the revenue.
I agree with this side of the table that I don't like the VAT, but you won't be surprised to know it's for different reasons. Why on earth would we want to copy Greece and Italy and Spain? You look at Europe 40 years ago, right when they were first implementing VATs, the burden of government wasn't that different than it was in the United States at the time. Now, since then, the burden of government has climbed some in the U.S., but it exploded in Europe because when you put in a VAT, it is like putting blood in the water with hungry sharks around. It's like giving the keys to a liquor store to a bunch of alcoholics. The guys in Washington are salivating. They're drooling. Government already is too big in the U.S. I don't want to give the 535 least competent people in America a giant new checkbook.
But right now, we have a central government that spends $3.6 trillion and collects $2.3 trillion. Can we close that 33%, roughly, canyon between what we're spending and what we're collecting?
Sure. It's very simple. We just do nothing. Allow all the Bush tax cuts to expire. If you just did that, our fiscal problems go away. But see, the problem is that Dan and people like him want their cake and eat it too. They want the Bush tax cuts extended. They want more tax cuts on top of those tax cuts.
I don't want all the spending. You know that if I was in charge, we would solve the problem. At least if you define the problem as deficits.
But do you believe that in the long run, spending and revenues have to more or less equal each other?
Yes, and the goal is, do we let the revenue line go up, or do we bring the spending line down?
But what if the spending line doesn't come down? Then what do you do?
Then we become Greece.
Let me jump in there, because it's been suggested that do nothing or do little is actually a plausible scenario. If Congress does nothing this year, every tax rate will go up. The highest individual tax rate would rise from 35% to 39.6%, the lowest from 10% to 15%. In addition, the tax rate on long-term capital gains would rise from 15 to 20%. Is that a good idea, at least short-term, given the financial hole we're in?
I'd say it's better than nothing, but it certainly isn't my ideal, because my ideal would be to tax wage income at the same rate as capital gains income. So doing nothing might be politically feasible, but I think in the long run, the reasonable response is we have to cut spending. We also have to raise revenues. And this notion that, all tax increases are bad just isn't viable anymore.
As a practical matter, we have one party that says raise revenues, largely, one party that says lower spending, largely, and instead of doing both, we do neither.
Well, that's because we have one-party Republicans who say lower spending, but they don't mean it. When they were in charge under Bush, they increased spending faster than Obama's been increasing spending. So my frustration working at a libertarian think tank is that you send people down to the fever swamps of Washington, D.C., that they say Washington's a cesspool. After they're there for a year or two, they decide it's a hot tub, and they make government bigger. And that's why I do not want to increase the allowance of children who are misspending their money.
Look, the expiration of the Bush tax cuts is one of these things that we call an action-forcing event in Washington, and people like Dan are going to be saying, "Oh, this is terrible. That the economy's going to crash." Well, people like Dan said we're going to crash after the 1993 tax increase.
I didn't say that.
Well, a lot of people on your side of the aisle did, and also. The people, if you accept Dan's theory, we should have had massive increase in growth after the 2003 tax cut. Everything that his philosophy believes in says cut the tax on capital, cut the capital gains rate, cut the dividend rate, and you'll get massive growth. Well, I don't remember any growth after 2003. There was nothing.
Well, actually, that was our best period last decade, but it wasn't that great.
We had a terrible economy, and if they didn't do any good, then they probably won't do that much harm if we get rid of them.
One of the specific plans that's on the table in this political season is Governor Mitt Romney's. Governor Romney has proposed reducing all individual tax rates by 20%, eliminating taxes on investments for those who earn under $200,000 a year, and eliminating the estate tax. Can America pay its bills if it's restructuring the receipts end in that way? Governor?
I don't see how it works. I mean, it sounds good. I'd love to be running for office again saying, hey, I'm just going to cut your marginal rate by 20%. But unless he pairs that with extraordinary cuts in spending, he simply will never balance the budget. And I think that is not a matter of ideology. That's arithmetic.
I actually fully agree with that statement, other than he doesn't need to cut spending, just he has to slow the growth. But Republicans have shown when they're in power, they are very, very weak when it actually comes to putting some discipline on the spending side of the budget. Now, you can't just promise lower tax rates if you're not going to try to control the federal behemoth.
I would like to point out that under Mitt Romney's plan, his tax rate probably goes close to zero. And one of the ideas I have is I'd like to see members of Congress disclose their tax returns. Because right now, we have no way of knowing which tax laws benefit them. So, for example, I did a study of the stock ownership of all 100 senators to find out how many own stock in the way that allows them to be eligible for the 15% rate. 9 in 10. 9 in 10. Whereas across America, it's less than 1 in 5.
That's a pretty broad caucus in the United States Senate.
The thing about Romney is that he says that he's going to, as many conservatives do, they will pay for rate reductions with base broadening. Now, this is a very good idea in theory. The problem is they will never, ever name one single solitary tax loophole or tax expenditure that they are willing to put on the table and say, okay, let's get rid of mortgage interest. Let's get rid of the deduction for state and local taxes, which of course is very popular, or anything else. They just wave their hands. We'll just wipe the slate clean or something like that. and they never do it.
Let's talk a little bit more about that. The federal government loses or foregoes collecting more than $1 trillion a year by offering 250 different deals that lower tax payments, excluding employer contributions for health care, not taxing Medicare benefits, the child tax credit, excluding contributions to retirement plans. If we got rid of all of these, would we end up with a fairer system?
Get the government out of the business of picking winners and losers, industrial policy, get rid of the loopholes that we all agree are loopholes, bring the rates down. You're going to have a more efficient tax system. The system will be less corrupt, less complex. It's just a win-win situation.
You're right. If we could wipe the slate clean, there would be enormous dislocation to many people. And understand, so homeowners across the nation who have a mortgage who deduct that interest and therefore don't have to pay a tax on a fair bit of their income would suddenly say, wait a minute, I have more taxable income. If we paired it with the theoretical argument, we could then lower rates. It would be healthier. There would be fewer disincentives, fewer dislocations. So yes, it would be the right thing to do.
Economists generally agree that the mortgage interest deduction does not cause anyone to buy a home. We are rewarding people for doing what they'd already do. Put aside the fact that renters get nothing. Talk about craziness. We not only allow you a mortgage interest deduction for your first home, we allow you a mortgage interest deduction for your second home up to $1 million total.
The problem is at this moment with the housing market still at the very bottom of a trough. Some people think we've hit the bottom. Who knows? Let's hope we have. If you were to take away the mortgage deduction, everybody who owns a home would see the price drop as a consequence because it is capitalized in. And so therefore there'd be enormous push.
So could you phase it out? Could you put into place a 5-year, 10-year schedule and start chipping away?
You could phase it out. And one thing that's very important to look at, there are countries like Australia, like Canada, like the UK that have either no or much lower tax preferences for housing, and they still have home ownership rates that are equivalent
and
to
the prices increased even faster in some of those countries than they did here.
The highest tax rate reached 92% in the early 1950s. Now it's 35%. But given our huge deficit, should that rate go much higher, at least temporarily, until we're no longer financing a third of our central government spending with borrowing?
I would say no, 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 no.
Why?
The answer, in my opinion, isn't raising tax rates. It's eliminating loopholes. It's eliminating exclusions. The 35% is already high. To me, it makes no sense to allow privileges to certain groups, for example, homeowners over renters when they both have housing costs. And therefore tax other people. It doesn't make sense.
So keep the current rate schedule, get rid of the loopholes. Governor?
Well, look, I think what the professor says is right. If you had to create a hierarchy, you would say first thing you do is close the loopholes, broaden the base. That may not be sufficient, and it may not happen. Practically, if you cannot get people to agree on what's a loophole and what's a legitimate incentive, that is often an ideological debate. If we had to go from 35 to 39.6, that's fine with me as a matter of philosophy, as a matter, because not that many people are paying the 35 or the 39 at the upper reaches. If we could reach some level where people were earning over $2 million a year, over $1 million a year, have to pay 39%, that's fine. That does not in any way offend my sense of fairness.
One thing that's very important to understand is there's a difference between tax rates and tax revenue. And the 1980s are a good example. In 1980, when we had a top rate all the way up at 70%, people making over $200,000 a year paid $19 billion to Uncle Sam. Reagan brought the top rate all the way down to 28%. Those people making over $200,000 a year, they suddenly paid $99 billion. You got 5 times as much revenue at a lower rate. But there is no question that people respond to changes in tax rates. There is a very high economic cost when you impose these higher tax rates because people just decide, I'm not going to work, save, and invest as much.
So if we go all the way back to those days, those dimly remembered days of 1996, 1997, 1998, weren't rich people still trying to earn more money and be even richer?
There is surprisingly little economic study of this, but you ask the question, at what point does the marginal rate actually dissuade somebody from working? I have not seen anything that suggests that you cannot tax people, let me state affirmatively, you can tax people up to 45% without, that's what I said, there's nothing that suggests in the 40s you dissuade people. You can probably get into the 60s, because as you pointed out, people still want to get wealthier.
Last month, President Obama proposed lowering the corporate tax rate from 35% to 28%, while eliminating loopholes and establishing a minimum tax on foreign earnings. Now, the corporate taxation has gotten a lot of attention during this political season. Isn't that combination of lower rates and fewer loopholes getting us part of the way to a grand bargain, if a grand bargain is even possible, Bruce?
Well, it's a move in the right direction, but I think he moved in the wrong direction by saying, let's have an extra special low tax rate just for manufacturing. And I think he's kind of, going in one direction and the other simultaneously. I think you need to have some basic element of principles here of we're going to tax everybody the same or we're not.
Professor, when people talk about that 35% rate, is it like sticker price on an auto? Is anybody really paying 35%?
Well, some are, but it's the exception as opposed to the rule. I think 2008, the GAO did a study that talked about 2/3 of American companies weren't paying the maximum tax rate. So, no, every time I hear we have to cut the corporate tax rate because the U.S. tax rate is so out of whack with respect to other countries, but the effective tax rate of the U.S. corporate rate is nowhere near 35%.
But I think part of the answer, though, is that the wrong people are paying 35%. In other words, if you view this as a matter of fairness, GE didn't pay any taxes. And I'm not trying to vilify GE, great company, does amazing things, but they are sophisticated enough to take advantage of the code. I think they have a bigger tax department than most law firms put together in major cities.
And a better tax department than most law firms.
Well, certainly better from their shareholders' perspective. But so the problem is that the small companies that don't have the capacity to understand all this are the ones who are paying the 35%, and that doesn't make sense.
We've been talking all about how the federal government gets the necessary money for its operations. There's a big tax cut in the last decade. We gathered less money and continued to spend more money. Is that kind of the crux of the problem?
It's certainly a big part of the problem, but who got the tax cuts? It goes back to the fairness issue. Those with capital gains and corporate dividends got a huge tax cut, down to 15%. Those of us with wage income, our rate's 35%. So who got the tax cut? The highest income taxpayers. Is not the same as who's bearing the burden or who will bear the burden if our tax laws continue, which is going to be the middle income taxpayers.
I'm going to stop it there. Guests, thank you all for a great conversation. Elliot Spitzer, Dorothy Brown, Bruce Bartlett, Dan Mitchell. Thank you all.
Thank you.